In today's episode, we are continuing the series about the One Big Beautiful Bill Act. However, I'm going to be talking about a deduction that already existed, but how the One Big Beautiful Act has made it accessible to even more taxpayers. If you've enjoyed this series, let us know. Let me know what other topics you'd also like for me to cover.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family. Welcome to episode 68 of Tax Relief with Timalyn Bowens. In today's episode, we are continuing the series about the One Big Beautiful Bill Act. However, I'm going to be talking about a deduction that already existed, but how the One Big Beautiful Act has made it accessible to even more taxpayers. If you've enjoyed this series, let us know. Let me know what other topics you'd also like for me to cover, okay? Because not only is this podcast about tax relief, it is also about taking preventative measures to make sure that you don't end up having trouble with the IRS, all right? So, with today's topic, we're going to be talking about a deduction that can help you to lower your tax bill. And that deduction is the charitable contributions deduction. Okay. Now, some taxpayers I've talked to have been afraid of claiming all of their charitable deductions because they don't want to send a red flag to the IRS. Listen, if there is something that you can claim legally, ethically, you have the substantiation to prove it, claim the deduction that you have the right to take. Now, what they may be confusing it with is on the Schedule A, because the information isn't typically reported to the IRS. That is an area where a lot of scammers and fraudsters over not predict, but they put too much for certain deductions. I'll give you an example. I worked with somebody this summer, the tax preparer whose name I will keep to myself, unfortunately, is here in Louisville, Kentucky, and they fraudulently put $90,000 in medical expenses, with $87,000 of that being insurance premiums. Now, to anybody that actually has to pay health insurance, you know that insurance is expensive, but it's not that expensive, right? So that's automatic red flag. The IRS would ask for substantiation. But if you are a person who gives qualified charitable contributions, don't be afraid to claim everything that you've given. Now, in this episode, I'm going to break down what an actual charitable contribution is. I'm also going to explain what qualified organizations are, examples of different types of contributions you can give, and I'm going to also discuss the limits to what you can claim for a charitable contribution deduction in the current tax year, how that will carry forward, and then I'm going to also explain how the One Big Beautiful Bill has made this deduction accessible to more taxpayers. Okay, so first, let's get right into it with what is a charitable deduction. Let me go back. A charitable contribution that you need in order to take a deduction. So a charitable contribution is simply a donation of money or property, and it has to be made to a tax exempt organization. Okay. That's the only way that it can be deductible on your tax return. Now, When we look at qualified organizations, note that I didn't say it has to be a 501c3, right? I didn't say it has to be a religious group. So when we're looking at the qualified organizations, it's going to mostly be 501c3 nonprofits. It can also be a religious group. So it could be a donation to a synagogue, it could be a donation to a church or to a mosque. Also, educational institutions. So, for example, shout out to my alma mater, Bellarmine University, Go Knights. They are an educational institution, so they're going to be a qualified organization that you can make a charitable contribution to and get a deduction on your tax return. We also have hospitals and certain government entities. Okay. So, like if you were giving to a park organization, right, that's run by the government. Now, something else is if the donation is for a public purpose. Now, if you want to check out an organization that you're thinking about giving to and you want to make sure they're on the up and up, the IRS also has a search tool to help you verify if the organization is qualified. Now, I will say this: churches, mosques, synagogues, religious organizations, they don't have to register with the IRS to be a qualified eligible organization. So if it is a church, they may not be on there. However, any of the other organizations that I named should pop up with the IRS search tool. Okay. Now, when I was explaining what a charitable contribution is, I said it could be cash or property. So most common we see donations made by cash, check, credit card, and now there are all kinds of cool ways where we have the different Give for Good days. You can Venmo organizations. Those are going to still count as cash donations. Now, if you are giving cash, you want to make sure for your records, you are keeping the receipt from the charity that you have given to. Okay. Or if you're giving through a third party, like sometimes I have clients who will give to United Way or maybe the YMCA through their paychecks. You want to keep those check stubs in the event that the Y or whoever the organization is doesn't send you a statement at the end of the year. Now, if you have any single donation of $250 or more, you must have what we call a contemporaneous written acknowledgement from the organization. This is typically, I'll use an example of a church. If you've given to a church or maybe an educational institution, if you've given a gift that big, or for some organizations, if you've given that much money, in multiple transactions, you will get a statement at the end of the year on their letterhead thanking you for the gift. All right. Now, I do want to point this out. If you give cash and it's considered a donation, but you are going to an event or you are receiving a good or service in exchange for the donation. So let's say, for example, it is a charity gala, right? You can only deduct the amount of your payment that exceeds the fair market value of what you received. All right. So let's say, for example, my favorite organization is having a fundraiser and they're having it at Steak and Bourbon. Okay. I love Steak and Bourbon. Just in case you ever want to do something nice for me and get me a gift card, there it is out there. Christmas is around the corner. Let's say that the tickets are $100, right? So I purchase a ticket. My meal at Steak and Bourbon, though, is $65. Because of that fair market value, we have to look at this, and it's called a quid pro quo contribution. I cannot deduct the $65. That's the fair market value of my meal. Instead, out of that $100 I paid, I can only deduct the $35. So if you're a taxpayer and you go to events like that, you want to make sure that you have some type of statement saying that you did not receive any goods or services in exchange for your donation, if that's the case, or sorry, like I started the example, if you're attending these types of events, you want to make sure that you have a statement showing the breakdown of the fair market value of the good or service you received, and then also the value of the donation, right? Because again, I want you to be able to claim everything that you have the right to claim, but this is tax relief with Timalyn Bowen. So I also want to help you stay out of trouble with the IRS. While still talking about cash donations are typically going to be limited based on a percentage of your adjusted gross income, so your AGI, right? So looking back at your 2024 tax return, your adjusted gross income is going to be found on line 11. Cash contributions are limited to 60% of your adjusted gross income. So, for example, let's say that your adjusted gross income is going to be $100,000 for 2025. Keep numbers really easy, right? 60% of that adjusted gross income is going to be $60,000. So, based on the information I just gave you, you can only itemize cash deductions for that tax year up to $60,000. Now, in the event that you gave more than $60,000 in cash for that tax year, remember you're only deducting the 60,000, but the additional amount that you gave is going to be carried forward to the next tax year. This is why it's really important when you go to a new tax professional that you also provide them a copy of your prior year return. There may be carry forward items that they need to be made aware of that they'll only know about from viewing the previous year return. All right. Now, typically in the past, taxpayers could only itemize charitable contributions to get a deduction. All right. So basically, you couldn't take advantage of this if you didn't itemize. Well, in 2021, I want to say 2022, but right now I'll just say 2021, the IRS gave a little bit of relief to those who made charitable contributions and didn't itemize. For taxpayers who are married filing jointly, they allow them to deduct $300. For those who were single, they could deduct $150. It was an attempt to incentivize people to give. Well, with the One Big Beautiful Bill Act, a variation of that has come back. Okay. So what we have now under section 170, subsection P, there is a deduction that can be taken even if the taxpayer does not itemize for charitable contributions. For single filers, they can deduct up to $1,000 of their charitable contributions if they don't itemize. For those who are married filing jointly, that doubles to $2,000. Now, here's the thing though. If you itemize and you give more than what you're able to deduct, the remaining amount carries forward. But for taxpayers who do not itemize and they're only getting that $1,000 or $2,000 deduction, it will not roll over. The remaining amount will not roll over to the next year. Okay. Now, another new rule for the One Big Beautiful Bill Act that is bringing in that will go into effect for 2026. We have a floor for itemized charitable deductions, which means that you have to give a certain amount above your adjusted gross income before you can begin deducting the contributions. Now, the floor is pretty low, so I believe for most people who itemize, they'll still be able to take advantage of it. But let's talk about what that looks like. The floor is going to be 0.5% of your AGI. So that's 0.5% percent of your AGI if you're running that through a calculator. So what does that look like? Let's say that we have adjusted gross income of $100,000 again, right? Well, 1% of that is going to be 1,000. So for that person, the floor that they have to give above is going to be half of that 1,000. So we're looking at $500. So let's say that somebody in charitable contributions gives $10,000. Okay, their adjusted gross income is 100,000. They give 10,000. They can only deduct the amount above the floor of that half a percent. So that half a percent is going to be $500 in this scenario, which means instead of their deduction being $10,000 like it would have been in previous years, it's going to be reduced to $9,500. So this is all my humble opinion. I think with Congress making the decision to make this more accessible to more people, somebody had to eat that. So that's why people who itemize now have this floor to kind of make it balance out. Okay. Now, I've talked about cash. Let's take a look at non cash items. With volunteering, you cannot deduct the value of your time as a charitable contribution. I'm going to say it again because I run into a lot of taxpayers, especially those who are entrepreneurs, different professionals, and they think, oh, well, if I would bill out at $500 an hour as a doctor, then that's what I can take as a deduction on my tax return. And that could not be any further than the truth. Now, for your out of pocket expenses that are directly related to the volunteer work, those things can be deducted as charitable contributions, such as the cost of supplies. Or if you were driving for the organization that you were volunteering for and driving your own personal vehicle, there is a mileage rate similar to when you were driving for medical purposes, how that goes under medical expenses. Similar to how if you are a business owner driving your personal vehicle, there's a business mileage rate. There is also a volunteer mileage rate. Now, check this in the notes in case I quote it wrong. I believe the volunteer mileage rate for this year is 14 cents a mile. Okay. Which you may be like, well, that's not that much. Well, think about this. Something is better than nothing, right? They say the Lord loves a cheerful giver. I believe it. The IRS is trying to show you that they love you too. Okay. So now let's look at non cash items. A lot of people are familiar with making donations to the Goodwill, right? You can donate different household items, clothing. Some people donate vehicles. Some people to educational foundations and things of that sort. They will donate long-term appreciated assets like stocks to start endowments. For non-cash donations, if the donations are over $500, you will need to file Form 8283, which is going to give the value of the item that has been donated on there. Okay. If you donate a non cash item that is worth over $5,000, it will require you to have an appraisal done by a qualified appraiser. Okay. So you have, let's say, a car that you're donating is worth over $5,000. You can't take that to your tax professional and say, hey, I ran this on Kelly Blue Book. It's worth more than $5,000. No, you'll have to have it appraised by a qualified appraiser. Okay. Now, I do want to point out as well that when you're donating something that's appreciated long term capital property, your deduction limit is 30% of your AGI versus 60% with cash. Okay. And another thing that I want to say as well, if you are giving to an organization, of course, it's a qualified organization, right? That is going to determine what the limit is that you can deduct on your tax return. All right. So if we're looking at private foundations, or something, let's say a fraternity, right? Or maybe you're giving to a veterans organization. Typically, when we're looking at those, you can only deduct up to 30% of your adjusted gross income, your AGI. All right. So if you're giving all of your money to a fraternity, let's say Omega Psi Phi, let's use an example of $100,000 again, right? Let's say that you give $40,000 because they're a private organization. That is going to limit how much you can actually deduct to 30,000 instead of you being able to take up to 60,000. Okay. But again, remember, not all hope is lost. You get to keep that and carry it forward to the next year. So even if you don't give $10,000 in the next year because you were limited and it carries over, you still get to take advantage of it in the next year. All right. So, with all of that being said, because this is an area that I see messed up a lot, not just by taxpayers, but also tax professionals, I wanted to bring clarity on what an actual charitable contribution is. So remember, it's cash or property donated to a qualified organization. Even if you don't itemize, you can still deduct part of your charitable contributions this year, $1,000, or I'm sorry, in 2026. So $1,000 for single taxpayers, $2,000 for taxpayers who are married filing jointly. There is a floor for charitable contributions now. So you have to make sure that the amount that you are actually deducting is only the amount over 0.5% of your AGI. So remember in our example with somebody with $100,000 for adjusted gross income, they can only deduct the amount given over 500. All right. And make sure that you keep very good records. You give to an organization, they send an email to thank you, print that email to PDF, put it away because you have the right to claim the deductions that you earned. All right. And if you have the information to substantiate it, you need to make that claim. Now, I know this episode is a little different than what we usually do, but I hope you still enjoyed it. And as a matter of fact, if you haven't already, I hope you go ahead and like this episode and make sure that you subscribe so that in 2 weeks you don't miss when the next episode drops. All right. Thank you so much for listening. Be sure to share and help me on my mission to fill the tax literacy gap one taxpayer at a time. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.